best thing about active investing, in my opinion, is you can buy a value add, right? So you can buy something that you can force equity, force appreciation into. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, as always, we got Matt Jones. Matt, how are you doing today?
I'm doing great. How are you doing, Todd?
I am doing fantastic, man. We just started February. It's crazy already 1 month into the year, but it's been good so far. You know, one of the things I've really been working on, I maybe mentioned this the last time, but I'm going to mention it again just in case I didn't. I've been really working on building purposeful relationships, trying to spend a lot of time doing that, making sure that I'm connecting with people that I haven't connected with in a while. If you're one of those people and you're like, hey, he didn't reach out to me, go ahead and reach out to me because I want to make purposeful relationships. I think that's going to be a great path forward. And I'm looking at what types of opportunities are out there, whether they make sense or not. No, I'm trying not to make sure I'm trying to make sure I'm not getting caught up in that shiny object syndrome, right? So there's a big difference between looking at opportunities and being open for opportunities and shiny object. And I'm trying to make sure that there's that balance there, right? So, but last week I had just some amazing conversations, met some great people, reconnected with some people that I haven't spoken with in a while. And, I really just took some time and reflected on some of those conversations that I've had and really trying to organize it, make sense of them and decide, okay, with the conversations I had, what are the ones that I want to be focusing on more, and what are the ones that it was a good conversation, it was great to connect, but it's something that wouldn't play into my business. Maybe it's just a good relationship to keep in contact with and be, a network and a friend with, but maybe it's not a business opportunity. So just been taking time to do that. That's been great. The other thing I've really been focusing on is my my health, my eating, and my just exercise, and making sure I'm staying up with that. So that's been a really good big focus for me, and it's been going really well. So it's been awesome.
Nice.
How about you? Anything new?
Yeah, like you, I've been meeting some new people and connecting with old acquaintances. I really like finding ways that I can add value to other people right now.
Yeah.
So sometimes it's just introducing them to somebody else that I know that could be useful for them.
Yeah, absolutely. That can be huge, right? Sometimes we don't have necessarily value we can add by like doing something, right? Maybe they don't need us to help them with something, but it could be a simple just connection, and that can add a lot of value to somebody. Oftentimes that can add more value than us even doing things for them. So those the right connections, just the right figuring out, okay, what are their needs and how can I fill those is really huge. So what are we talking about today, Matt?
Well, we're going to be talking about passive versus active investing.
Passive versus active. So I hear it a lot, should I be passive? Should I be active? And I think but by the way, I think there's a lot of confusion between what passive investing is and what active investing is. I think people have different definitions of it. And I just want to clarify what my opinion of passive versus active, and you can tell us yours. Well, maybe why don't you just start with your definition? What do you think a passive investment is? What do you think an active investment is?
I think it depends on like how much work I'm doing. Like if I'm not doing any work and other people are doing all the work, then that is definitely passive. And I'm just taking the money that's being deposited into my bank account monthly or quarterly. That is something I love. But active is also great too, because it's where you have more control. You're doing more work. You're making the direction of the property or properties go in the direction that you want. But that takes more effort on your part. A lot of times you get more rewards as a result of that, though.
Yeah, absolutely. So yeah, and I agree. I mean, passive investing is truly passive investing, right? It's not, you're not actually out there doing the work. You're not finding the properties. You're not dealing with the property management companies. You're not dealing with the tenants. You're not dealing with the maintenance. You're not dealing with the decision making. That, in my opinion, is passive investing. And active investing is when you are doing that type of stuff. Now, I'm a big advocate for both. I've got hundreds of investors and they're passive. And I also am passive in some investments as well. And I think that's a great avenue and absolutely should be a part of everybody's portfolio when the time is right. Active investing, I'm obviously a big part of that too. I mean, that's basically most of the bulk of what I personally do. That's how I built my entire portfolio. And I'm a big advocate of that as well for the right people. Some people it's just never going to be right for, but if it is, I'm a big advocate as well. And so that's one of the biggest things though, what I just last said. You've got to really think about who you are, what you want out of it, and what your lifestyle right now is, and which one is best, right? Is passive best or is active best? And oftentimes we try to fit this this square peg into a round hole, vice versa. We try to do something that we feel is the right path because we were told it's the right path, but yet it's the wrong way to go for our lifestyle. So you got to really think about who you are, and what you're truly trying to achieve before you decide, okay, I want to be active or passive. I think that's important.
Exactly. Do you have the capacity or interest to handle those problems that come up in real estate that we talked about last week? Because there are going to be many, like you're going to have tenants that don't pay, or some people you're going to have to evict, and the building, like the roof could fall off. I mean, all sorts of stuff. And if you're active, then you're the one that might be addressing all that stuff, or you have the property management that you're overseeing to make sure that they're handling that stuff.
By the way, I wanted to dispel some things. People think that our passive income for real estate. So first of all, I hear a lot of people saying, I'm building passive income through buying real estate. Well, if you're actively the one buying, if you're actively the one managing, you're not passively building income. You're actively building income, right? You're creating a job, and it might not be a full-time job, but it still is work, right? You're not creating fully passive income. Now, could it turn very much more passive as you build systems and processes and create a business? Absolutely. But at least at this point in time, it's not passive. Turnkey properties, buying turnkey properties. I hear a lot of people, they're going to go buy turnkey properties because it's passive. That is not passive. I'm sorry. It is not passive. Yes. Do you control some of the things so you like it? Yes. But it's not passive income. And quite frankly, I don't think you control very much because you give somebody else the power to choose the property, to choose the neighborhood, to choose everything, and to tell you this is a good deal. And then you go and buy it just because you have that thing in your personal name doesn't mean you control it. It controls you because it's probably not making much cash flow. Somebody else did all the decision making for you. And by the way, you've got a loan in your personal name that is, they're going to go after you if things don't work. And so that I want to dispel, like turnkey, in my opinion, is not passive at all. It's active. And it's, in my opinion, probably one of the worst ways to invest. And I know some people that do turnkey and that's their business. And sorry that I just said that, but in my opinion, you're not creating some of the power that we have when we buy real estate actively.
Yeah, I mean, we've talked about it before. The value add component is what you and I both love, because that's, so much power. You can create value out of nowhere just through your own mind and efforts. Turnkey investments, they're good if you're looking for a low work sort of property with, but don't mind the low return at the same time. But it's not for me either.
But what's good about that? Why have a property that is low return that you have to take responsibility for, when you can invest passively for the same or better returns and be completely passive.
Well, I mean, if it's outperforming your stock portfolio, then that might be appealing. But I mean, I you're asking me to argue a point that I don't like myself.
So I
there's
think,
money to be made in it, but
sure. Yeah. There's money to be made in selling toilet paper too.
If you're exploring the different ways to invest in real estate, then you got to check out my new book called Book About Real Estate. It summarizes, reviews, and condenses over 20 top real estate books to help give you an understanding of the full spectrum of real estate investing very quickly. So buy it today on Amazon by searching for Book About Real Estate by Matt Jones.
So I think the best thing about active investing, in my opinion, is exactly what you just said. You can buy a value add, right? So you can buy something that you can force equity, force appreciation into. You can take something and you can do a renovation. You can cut expenses. You can add a unit. You can do something that's going to create value that wasn't there before. And here's the even better power of active. So you do that, you create equity. And then what do? You refinance that property and pull all or some of your equity out, with, of course, being conscientious of how much your loan is and how much your cash flow still is. But if you're able to do that, that is the most powerful and quickest way to wealth, being an active investor. We can take let's say we take $75,000, we pour it into this property. We do the work to get it done. Maybe we're not physically doing the work, but we're hiring the contractors and we're managing that process. It gets done, and then we can refinance. We can take that $75,000 and we can take it all, put it all back in our pocket and rinse and repeat. Now that is building active wealth. That's powerful if you can actually do that. In my opinion, there's no better way to do that. Passive investing can't touch that. Investing in turnkey properties, nowhere even close to that. There's no better way if you can do that. Now, it is a lot of work. It takes a lot of work. There is risk involved, right? And in every market, it necessarily can't be done at all times. In the Twin Cities right now, this is a difficult thing to do. Can you do it? Yeah, you could, but it's not going to be every property, and it's very difficult to do. And your returns right now have been going down substantially, or have gone down substantially since when I did it. So it's a different kind of animal right now, but that is a great active way to invest, in my opinion.
Yeah, I think you had a great point of like with active investing, you're going to get your hands dirty. You're going to have those trials and tribulations to handle. If somebody here who's listening to our podcast, if you have a full-time job or business that really takes up all your time and energy and focus, and you love it though, and so you don't really have the time to actively invest in real estate, then maybe passive investing is the way for you to go, because then you can still get the benefits of real estate ownership and the cash flow without having to do all that work yourself.
Yeah, absolutely. And by the way, you can do both, right? So I know a lot of people that they've got good W-2 income coming in and they want to passively invest, but they want to become real estate investors. So there's plenty of people that invest in my deals. They invest 1, 2, maybe 3 times into my deals, and they're just doing it for the sake of learning. They want to learn. Of course, they want to make money on their money, right? They're doing it for passive income, but the biggest reason they're doing it is to learn. So they're coming along for the ride. They'll even come and tour the properties with me. They'll come to due diligence with me. They'll jump on asset management calls. They'll be a part of it. They're seeing all our monthly emails, all our financial statements, all that kind of stuff. And so they can get an understanding of what's being done behind the scenes, essentially a free education. Even better, they're getting paid for that education. And they're learning at the same time while at this time, maybe the season of their investing is buying duplexes. But eventually they want to start buying, 100, 200 unit buildings. So I know many people that are doing that. They're building up their passive income. Through that, they're building up some active income through buying duplexes and quads and stuff like that. And then eventually that's going to replace their income. So you can do both. And I know other people that they just have awesome jobs. They love their job and they're making so much money in their job. Why would they ever leave it? And they just want to be passive, completely passive. I've talked to many people who've realized, like, I can't buy a duplex. It makes no sense for me to buy a duplex because it just takes up all my time, and I enjoy my job and then I enjoy my life after my job, and I don't want to compromise that. So I just want to passively invest in your deals. And they've discovered that. I think that's the smart way to do it. That's what I'm talking about, when you've got to figure out what works for you. I cringe when I hear people that have these awesome jobs and they love them and they're going in and buy a, one duplex. It's like, what are you doing? You don't even know what you're, and by the way, I'm an advocate of going big, and you don't have to go massive. But I think that if you're going to be an active investor, you should be buying, if you're going to actively invest, you should be buying multiple properties. And I'm talking like 10, 20, 100 units. Okay. I think the more the better. You can create systems. You can replace yourself. If you've got a duplex or 3 duplexes, you cannot replace yourself. So you always have active income. You always have to be there. If you buy, 20 duplexes, 10 duplexes, now we can create more systems and we could potentially replace ourselves.
Yeah, it's just more efficient to the economy of scale. The more units, the easier they are to manage per unit, and the more profits you're going to have in the end.
Yeah, absolutely. Absolutely. So you got to look at what's best for you. But yeah, there's no right or wrong. It depends on the person. And again, I do both. Like I have passive investments, I have active investments, and I do both. I think there's power in both. I actually do both for multiple reasons, right? I passively invest to passively have my money make some money without me touching it, but also to learn. I invest with other companies that I truly believe in, and I want to learn from them. And that helps me become a better investor as well, right? It helps me become a better operator. And so I think that's really important for myself.
So active investing lets you expand your wealth quickly, whereas passive investing allows you to maintain your wealth, but also learning at the same time, if that's what you want.
Look, there's no way. So passive investing, yeah, sure. Can as a passive investor, you got to expect to make 15, 20% annualized return on your money. That's good. Maybe you make more. Maybe you even make 30 or 40%. That's great. Maybe you even make more. Maybe you make 50% annualized return. That's awesome. But if you're an active investor, you can absolutely blow the doors on it if you do it right. But you can absolutely do the opposite too. It's a lot easier. In my opinion, it's a lot easier to go up really high or down and lose everything. As a passive investor, you've got the floors and ceilings. Now, could you lose everything? Absolutely. You have to be aware of that still. But if you're investing in good companies that have good track records, that do things the right way, your chances are small to lose everything. But again, your chances are small to get 50, 60, 70% return on investment. There's many of properties, I have actively invested in, and I've been able to double, triple, even quadruple my money in a fairly short period of time. I shouldn't say many. There's some properties, most of them aren't that great, but some of them are, and that's where you can build a real wealth.
Yeah, another key difference is that with passive investing, you're using your own money, whereas with active investing, you're able to leverage other people's money to make money off of that.
Yeah, that's true. That's true. Yeah, you're absolutely right. I mean, with active investing, and that's how I started. I've been ever since I started doing the active investing. Um, that's all I've known. I've used other people's money to help invest, and we've partnered together in one way, shape, or form. I've made them money, and in return, uh, because of their money, I was able to make money. Otherwise, I wouldn't have been able to do it. And so, yeah, absolutely, you can leverage other people's money. You can get in with passive investing. You have to have, let's call it $50,000. With active investing, does it help to have 50K? Yeah, absolutely. But do you have to? No. You can call up Matt Jones and ask him if he wants to partner with you, and Matt Jones will happily give you $50,000 of his money, and then you can make it. So call Matt. Well, Matt, what's your phone number? No.
Well,
Yeah.
I mean, if it's a good deal and I trust you, I'll invest with you. But
Yeah, there you go. Well, cool. I mean, we could continue on, but I think the main point is, look, you got to realize what's best for you. You got to really think about that and think about the opportunities out there. In my opinion, there's no point in investing in active investing if it's not going to at least outperform passive investing. Why not just do passive? You can still learn from passive. You can still get great returns with passive, but with active investing, again, if this is what you want to do and you want to create a business, well, obviously you have to actively invest, and you can do really well with it.
all great conversation. Hopefully our listeners have gotten some value out of this.
Yeah. Oh, they have. No questions. All right, man. Well, you have a fantastic rest of the day, and you make every day a Saturday.
Thanks. Hey, you too.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.